Good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Thursday, and it's February 4th. We got a bit of economic news released scheduled for today, so we're going to jump right into it. We'll start off with the weekly jobless claims. So we had 277,000 people apply for unemployment last week. It was supposed to kind of keep similar to the range of 280, and it jumped up a little further than expectation at 285,000. On the other hand, we also got productivity for the fourth quarter, so we got a few labor stuff here, and the previous reporting was at 2.1% for the third quarter, and the fourth quarter was supposed to basically do 180 at negative 2.1%, and it came in much worse at 3%. So productivity dropped in the fourth quarter, which obviously is not good news. Unit labor costs, as we could see, went up. We go from 1.9% in the third quarter. Forecast was 4.5%, and it came in at forecast at 4.5%. So labor costs went up. And we also got late factory orders in the month of December. So November it was fell 0.2%, and it came in at 2.9%. So right about where expectation of 3% came in pretty close to expectation of 2.9%. So overall, really not a good day for data here. So weekly jobs claims jumped up, productivity worsened, unit labor costs went up, factory orders worsened. So overall, not the best of news here today. Stock market's a little mixed today. We got the Dow's only one that's up a little bit. It's up about, right as we speak, it's up about 30, while the rest are down a little bit. Like -1 or 7 and stuff. So not down too far, but they are down. We got a few Fed members speaking today, so it could be a possibility for some volatility depending on what they say, especially if there's any talk about the economy and their projections of interest rate hikes this year. Anything that could trigger those could create some volatility of the market. So be prepared for that. So right now, as you can see, the bond market came down yesterday, which we had a price for the worst. So we came in lower than where we left off on Tuesday. Today we're up about 6 basis points, so we're kind of about the same where we left off yesterday, essentially. So really, it's not much change from where we were. As you can see, we've seen a little volatility with the little wicks there in the candles. So there's been a little volatility. The markets actually were down even further, and they pulled back a little bit. So which translates a little higher rates here. That's why I pulled back a little bit on the bonds here. All right, folks. So rates are about the same where we left off yesterday. Which yesterday we did have a pricing for the worst, as it did drop a bit as the stock market rebounded later in the day. That's kind of what this represents here. All right, folks. Hey, thanks so much for watching. We'll catch you guys tomorrow. Remember, tomorrow we'll have the Bureau of Labor Statistics numbers, and those will be kind of the key ingredient for this week for the data. All right, take care and have a good one, and we'll see you tomorrow.